to Kenya, where Einstein Kihanda, CEO of ICEA Asset Management, is standing by. A very good morning to you, Einstein. Yesterday's trading session, some positivity coming through, local investors dominating trade, really on the back of those corporate results that are expected to be quite good. Are you also riding on that corporate results wave?
Yeah, thanks, Mashudu. I think in terms of the expectation on earnings, one of the key highlights I think that is driving the performance of the market so far has to be the rate cut that the Monetary Policy Committee implemented a week ago, where the rate dropped from 18% to 16.5%, and that is driving the equity market. With regard to the equity market now being considered an option, as rates are expected to continue coming down. So the fixed income market in terms of treasury bonds and treasury bills is looking less lucrative, and I think that is also a factor that's driving the market. It's also important to note that with regard to the earnings, particularly for the banking sector, I think the fact that rates have come down also is a good sign for them, in the sense that some of the concerns about bad loans and also the expected improved lending is also driving the market.
Let's talk on the banking sector. We have Standard Chartered Bank coming out and saying that they will cut their base lending rate by 1.5%. We also had Barclays coming out and saying that they will also cut their rates. Could we see other banks coming through, and looks like it's going to be beneficial for the consumer?
Yes, I think ultimately that is going to happen, because we have to remember the banking sector in Kenya is quite highly competitive, and for a period of almost more than half a year since the interest rates were raised to 18%, there's actually been subdued activity, economic activity, and this is actually reflected by the statistics released a few weeks ago on the GDP growth for the first quarter, indicating the financial sector performance was actually quite low, and the high interest rates were a big factor. So the fact that we are now seeing rates coming down is also an indication that we can expect much more rate cuts from other banks in order for them to remain competitive.
Remaining competitive, but the base lending rate still remains around 23.1%, with a number of sectors within the economy complaining that it is too high. At what levels could we perhaps see this rate getting to?
I think it's also a question of time, because it's only been just a week since the rate cut. So I think we would expect, as this news filters into the market, that ultimately we will still expect that that will take place. So I think we need to give some element of lead time as the market tries to monitor the implications. I wouldn't expect an immediate reaction. I would expect it to be, at a gradual level, especially as we've also, as part of the statement that the Monetary Policy Committee released, was also an indication that they'll now be meeting after every 2 months as opposed to on a monthly basis. So it means that it will take a bit of time for them to be able to monitor the implications and effect any changes. So I think my take on it is that it will require a bit more time for that to happen.
Let's touch on some of the companies that have come out with results. But first of all, let's touch on Express Kenya, out with a profit warning in yesterday's trading session. Earnings expected to be down about 19%. What are your thoughts on Express Kenya?
I think that is I think the main factor that accounts for the decline in Express Kenya is actually the loss of the transportation contract with one of the key clients. And it's therefore taken a bit of time in terms of them restructuring the business and repositioning it to take advantage of opportunities that may arise. So I think that is the impact of loss is a significant contributor to the company's business. So management has to now look at how to reposition the business.
Now, Bumi also expected out with results. We saw that stock ending up about 3.5% in yesterday's trading session. This morning also trading in positive territory, really on the back of the higher demand of cement demand from the government with the rollout of infrastructure. Your thoughts on Bumi and the long-term outlook for the company?
I think with Bumi, yes, you're right that there's quite been significant high demand for cement. The infrastructure investment has been quite significant. And I think for Bumi as well, the fact that we've seen international crude oil prices come down, because as a cement company, energy costs are a major factor in determining how the operating costs of the business will be. So the fact that we've seen global crude oil prices coming down is good for the business in terms of reduced costs, and as well as a much more stable currency. If you look at the East African region in terms of infrastructure developments, the outlook remains positive, although you also have to be cognizant of the fact that we've got quite a number of new players in the cement industry that have come into the market and who are positioning themselves to take advantage of these opportunities. So I think one has to also recall the market factors, but I think generally the outlook for Bamburi would appear to be positive.
The last day of trading, which is Friday the 13th, what are your trading ranges in today's trading session? Which stocks will you be looking out for?
I think it's still a bit of time before we expect the banking sector, effectively represents a big portion of the listed companies at the exchange. And as I said, the biggest factor is really about the interest rates cuts. But it may be another few weeks before we expect the half-year results. So I think it may be a bit of time before we see those results filtering in the market. But I think the banking sector still remains, a key factor in terms of the expected strong performance of the market.
Well, that's where we have to leave it. Thank you so much for joining us. That was Einstein Kihanda. He's the CIO at ICEA Asset Management, joining us from our studios in